Alright, back in the grindstone. Getting on this double bottom. Back here on this 4-hour chart. I'm just going to drill down to the double bottom here. So if we can hold here, these are 50 pips, and we're down 100 off of that stop hunt there where they trap these higher high people. Of course, I guess the place to get in was here on this 50 pip, right at that 50, right at the round, and then here to the 50, back. So it's a real aerial view of a football game, really. If you figure that he broke through the bleachers here, came through the front row. You know, definitely not what people like to see, but definitely buying here all the way down 200 pips. You're going to make all those many pips. So 4-hour swing trading has got to be the best wave. Maybe 1 or 2 trades a week, but just mind-blowing antics of the stops and everybody. Because we got a hammer here now. So people call this a pin bar. But the thing to do now is to get into the next session, since this is really Wednesday in Europe right now. So you're halfway through the week, and this is when the swap's going to come unwrapped, and going to see the market take off like launching a balloon in either direction because the tension's gone. If anybody holding on to their scare out of their mind hedges, right? Because everybody's afraid the world's coming to an end, right? So I'm just going through this demo and trying to force myself not to blow it up. On the 1 hour, I got kind of pissed off when it went down 150 pips, almost 150, about 120 pips here on the 1 hour. Had you got in at the apex of this triangle, definitely buying like now. Now I'm going to risk blowing the account up right now. So I'm just going to load the wagon at the market, and I'm running that same screw at that market order with this is my triple exit. So if you had to nail that down, it's going to look like this. Just by random happen chance, I didn't pick that. It just put the take profit of like 20 pips. So you figure this market's going to move in 20 pips. So you want to get out on the 20s, get out on the 10s, get out on the 30s. So this is like a aerial view of a football game because it's gridiron. Pip grid, same thing as gridiron. And when the guy, let's see if I can get my drawing tool. He said when the guy goes through the goalposts here, right? He gets through the 50-yard line. And he comes back, they push the ball back, and he comes back, and then he just keeps in. And when this triangle's forming, you know, and you get this beautiful flag, if you're going to enter a breakout, you've got to risk getting in here, and then you just almost get stopped out. You have a buy stop here. Your buy stop here as this triangle starts to form. And so now, I think we could still come back to here, right? I mean, that looks like an obvious void forming. This is like the sinkholes in Florida here. And maybe I should go for a different color there, huh? Yeah. Everybody likes blue. So this would be the water down here. And here's your ridiculous, you know, zigzagarola. Here's a beautiful 1 hour slide of just nothing but literally never let go of that until we got back to almost the apex of that triangle, but you did on the wick here, so right on that wick, this hammer coincides with the thingamabob. Yeah, it's easier right like that, I think. So, that's right, I can't have that on with, okay. Anyways, this thing here, this ridiculousness here, where it fell out of bed, that was became the big barrier. And then you just have these patterns that, and then people say, well, what's the pattern? What's the rate on that pattern? Well, I guess it depends on how big you're in the market, you know. If any pattern, like this double bottom, with this stop hunt, if you didn't count on some of that drama, you're in trouble, right? So, I mean, I guess that's the way I'm looking at it, is that if there's a stop here, because the guy got in here, he wrote it here, he never took profits, he's going to reload, or the guys that missed the train are going to reload on the stop hunt of this fractal, which is pretty much the center of the launching pad of this triangle, if you consider this to be the top that became a bottom right in the middle, right there. And so the channel you're drawing out, well, it's just compressed it, one level of compression, and then now we're looking a whole 6 days back. But we don't need to know too much in these markets. I know if it goes down 100 pips, I'm definitely buying it. So if they stop me out of this long position, I'm getting in at these the retest of this thing. So I'll just get it like that. I'll just canvas that whole area. So if we sweep down in, we can do a retrace strategy where you're spiking about 40 to 20 pips. You're giving the market 20 to 40 pips of volatility before you're going to blow up your account. And this way, you take your account from, say, $100 or $300 or $1,000 or $3,000, and high probability setups. They only come maybe once or twice a week. A 4-hour chart. But that's the 1-hour chart there. But 4-hour chart right now is double bottom. So for tonight, I'm thinking we could come down and even possibly retest this by the end of the week. But that's only about 100 pips down into that. And then my next order is going to be right here. This bottom right here. This one, I actually put more orders here because of this bottom, and there's one there, and then there's the top that became the internal crush zone where it went flat just before it went through that. Anytime it goes flat, that's going to be your dojis. You know, anytime it goes flatline, like it's dead in the water. And of course, these turn on a dime things are just insane, you know. Of course, there's this problem here, so anybody that's trying to trend trade it, they're going to get clobbered by this 50 pip wick. And that's always another thing. So if you're not trading it from the smash and grab method, if you're going to trade breakouts, it's always a liability either way how you're going to get in, right? So I think it's always like, if you're a limit entry person, you're buying 50 pips away from current price. But if you're a stop entry person, I think you're getting in at the market, really. You might as well just trade the market, right? I mean, I guess you could have a 5 pip, 10 pip stop, but if you put it wider than that, all the market makers are going to rush up into your orders, trap you. Unless it's dead on that you think the market, say you're drifting up at the end of the day, right? I guess that's be the time to put in a stop entry. The market's kind of just grinding along. But when the market's spastic, totally go to limit mode, because your stops are going to get totally crushed. They're going to fill those orders, and I guess if you're sitting there at the borderline with a hard stop tight, yeah, you break out of the triangle, you're already in profits. Let the rest go. But if you're wrong even a little bit on the I guess it depends what you can handle as far as babysitting these markets. I'm pretty much on the 5-minute chart for the entries, I would say, you know, even for a scalp, because what else are you gonna do, right? You gotta go for, like, see, for me, it just keeps treading water. And I just keep buying every time we retest this area here. But actually the internal top, the last known capitulation, this would be like the top of the hammer on the 5-minute. So it's really think of that as a 1 hour hammer, and then this is your retest. You got 3 hits. Now it's starting to invade the zone there on the 5 minutes. So at least in this way, you only have a few choices to draw your horizontals, and then the rest of it's up to the market to kind of reset the scale at the end of the day. In the next session, typically there's a change of attitude. So that's what I'm counting on. Just typical human behavior that people will think maybe they overshot the runway, just like they did on the gap open. Then they fill the gap, then we overshoot the runway to the top side, then it rips back 150 pips because the market just is like kind of just getting sober, you know. So as it's getting punished from both being praised and being told it's a complete idiot or whatever, it's just like the market's just making up for that vacuum that formed over the weekend. So now, if you're running any type of MACD, you know, your robot, I mean, unless your robot's built for this territory, then it seems like these robots buy at the market, and they're just trend bots, you know. I've seen a couple grid bots, but those are actually getting on stops, which I guess so, but I think it's better to just hand place all your orders at the previous known pivots, you know, and that's how I look at it. You know, like, so right now, 4-hour chart, this is my big deal price right here, but we already been there. I don't know if we'll get back there, so that's kind of a real it's kind of thing with jumping in these markets. You know, you lose a lot of money when you think you missed the train, but I would say the 5-minute train, if you're going to ride the 5-minute train with the 1-hour train in the rearview mirror, so to speak, then you could probably do it. Let's get this back to original format. I think this is a doable situation here where you're looking in the rearview mirror where you know all the key areas are, and then you're on the 5-minute. You're scalping, and you can see the big picture, at least a big enough picture. I mean, this is 100 pips right here. Who needs to look any further? And then it's almost 100 pips up, 100 pips down, 100 pips up, now 100 pips down. I mean, holy crap. Like, if you're running 200 pip stop, you're loving it, right? Because you're just like, yeah, I'm in, I'm out, yeah, I haven't gotten stopped out. But you still got to be taking profits. Otherwise, you just wasted your whole day. Like, if you bought here and you never got out, you're only up a few pips, and you're like, oh, they said let your profits run. That's the whole problem with that, is that you really have to be taking money. If you're in even slightly big, you better be scalping. Otherwise, you're just going to get annihilated by these swings and all this drama, you know. Because it's ridiculous, you know. There's no way your moving average crossover system is going to be on this 1-hour chart here. You know, you got a situation here with this gap. It's just that was the only thing about Forex is 24-hour markets. It's still playing catch up, trying to coughed up a hairball there. So, anyways, I'm long, of course, because we're back at the starting gate of this apex, and I got some sell limits up here, but I don't think we're going to hit them. I try to put these as far away as could, so at least I could feel safe enough that if they go up there, that you know, I'm not going to, in other words, this be like definitely the whole zone to me is resistance at this point after it collapsed. If we ever revisit the top, and the current trend line channel to break is this. Got this first place we can hang this guy and just hang it off of that, and so I could see it getting back down into this thing for a buy. So I buy it if it cranks down in. So I'll put this bank in, and then I put this other one and decided to make this one split. So I try to get this account up to $200,000 just by putting in this order. Because if it ever comes down here and ricochets off of that, I mean, obviously, This is so deep. This lasts for about, and this is a wide span one here. So this takes over a wider zone. So you're just putting in basically swing trade orders. And then you sit back and see what happens. And just as long as you don't overload, you don't put too many orders in, right? So now it's all squarely on the 5, and we've been revisiting the supply zone here, and I'm looking for the big kahuna rally here, because the bond market's closing in 9 minutes. I'm expecting the bum rush to come, and who knows, right? Anyways, I guess you could break out this tool and see the triangle, and then just you could say that's a failed walk down a stairway. So high probability that just as the bonds are closing, you could slam up maybe to this price, come out of this drift channel. If you zoom out on the 5, you can see we tagged this beautifully. This happens to be the new triangle. It's also this ricochet zone here for the 5-minute guys to literally get the hell out on that pivot, and then somebody decides, and you know what, we're going through that pivot again. And then when it got to here, if you look back, it was this soft bottom, right, coincides with this. So here we go. We're gonna have to break this channel. So I loaded up, not too heavy, because I never want to trade too big, but I would trade super big. If this thing crushed back into this demo right now, down into here, and filled all these orders, and then it goes ripping up into here, that would definitely put me up a few bucks. Of course, a demo count, you know, you can have a lot of fun like that. And here's the 1 hour picture, which looks like a nice hammer right here on the 4 hour and the 1 hour. And I'll just put my cells up here for a attempt to go up there. Put my cell limits up there, and just, if I set these for about 10 to 12 hours, or 8 hours maybe, for this 100 pips. So if the market can go up 100 pips in 8 hours, it crushes into my cell limits, and it pulls back, cashes out those orders, and go the 4 hour here for the people with patience. But yeah, the 4 hours got this nice trend line coming up on here. Easy to draw trend line. It's a 3 touch, and then just copy that over, or just find that wavelength here. I guess we would, if we really want to do it the right way, we would try to get these nodes to hit the peaks, right? And then you could say, well, by tomorrow we could, or this would be the rate of descent that we've established at least, right? And you could do a channel off of this, just copy that over to the other rollover point. It's probably this, it's gone off that, and then you go for the opposing angle, find the rollover here, and copy that out, so you can see when it can't take it, it steps through these windows here, and then this would be the support level we should be coming into. And here is the, if it ever came down there, you'd have an order. And this is the big controversy zone. We're sitting right here at this big battle zone. We're just below it. But I think this is just maybe a possible, this is a 4 hour chart though, so it unfortunately may take some time to get down into this price, because that's our expected time of arrival. The current rate of descent, you could put a pitchfork in here, go for the center, So we're caught in this trap here in this rectangle here. So we come down into here. Bond market in 2 minutes, going to close here. And I got this running. This is the channel I built earlier, and we're just breaking out of that. I'm expecting a slam into these prices. Seller's going to come in. It could rip back off of this. So, and this last minute's going to be pretty crazy. So they could spike it all the way down and hit this price. They could take this out. So anything could happen. These are just killer. Didn't last a lot of time there, you know. It's probably all of like an hour there, right, of all that insanity. So here it is. It couldn't close above it. So that, okay, you got 15 seconds. Now this is going to make a dramatic move here. It already made that spike move, because the market makers are jumping on this thing now. So I don't know how my clock's doing because of that second they added. But here, yeah, I'm straight at fair value now in the 5 minute. I'm sitting at the apex of the triangle. So this is when, if people get in there too eager, you know, they'll create an order imbalance. It's going to go down before it goes up. Although I do think it's going up. I guess I'm too optimistic that once these Greeks, once the euro can let go of these babysitting these this olive oil, that'd be great, right? So here's the 5 minute bigger picture. You build a channel off of that, and then just drag it over. So you can just build it into the future, and this way we can speculate, right? Evil speculators. And then right now we got a top bottom here. So that's the current pivot. I have to hold here for the next hour. At least till the stock market gets done selling off. I don't know if it's still tanking here, but I know gold stepped through the window here. It took out the low and then pulled back. I think it's probably I think it could be doomed. This could be nothing but the breakout, pullback, and then go to hell. So gold may be baked. This pivot here was, it's got it, but really this got to hold this, and then the 4 hour, there's a support level back here for a buy at 1165. So I guess buy 1165 on that gold, and you know, what are you gonna do? Here's the euro, just treading water there. But I think we're bonds are closed, and they're gonna jump on it. 5 minute train guys are in charge here, so hopefully this will make the account go up. If we take out this trend line right here. So I got a nice triangle forming on the 5, and we're drifting into it. This looks like a ripe time to get in for at least a half hour spike up. And that would just dump everything maybe, unless they hit this in about an hour, this double bottom up here. And this is about 40 pips up from where we're at. That's about 35 pips to this line. But I'm sure that most people would get out here because it'll be the stop hunt of this, and it'll be the retest of that. So it's like it fell through the floor, but it's caught between the floorboards and the it's just in the crawl space here. And then if it can jump back to the upstairs, run all the way to the top of the house, and then jump out a window, you know, and you just sell it as it jumps out the window. They bid it up to $1.22, and then they're like, "Holy, are you kidding me?" And then they would take it down like, you know, 1,000 pips from there, maybe. It'd be a fun ride. Anyways, I'm in it for like an hour or 4 hours for me. But anybody that wants to trade long term, you know, go for it. Same rules apply, right? I mean, double bottom here. This is just a classic. This is a hammer. It's like here's a doji. And you can see the perfect turnarounds here. They're all reversals. But yeah, look at this puppy to pop up into here. I mean, it's really insane. But I think it's still digesting the gap open. We kind of caught it off guard there a little bit on it. Unless you got unless you're running a wide stop, it's a little bit, oof. It's a bit much. But yeah, there's my 5 minute, and waiting for this thing to resolve, break out. If it doesn't, it's just going to keep going down this the highway to hell. It's going to walk down this thing. Got to give it a place to go. Maybe take this out in time, double that one. So it's like you're walking into this cage, but you're trying to speculate on the ricochets places, like so it's like hitting the wall, and this congestion can really be frustrating, but you know, you have to I guess adapt to the way the market decides it wants to the pace it wants to go. That's always a problem. Here's on this 15-minute chart. Look at this nonsense. I mean, this is literally smashing up about 60 pips here. So that was a nice price pulse. Certainly, if you got in here and you could hang this off of that for your price projection, that wasn't too bad of a trade at all, I suppose. Right, you know, like that, you almost get there on time, and then you had the horizontal pivot, so you had the confluence there. Of course, you overshot the runway again. Maybe not off the wicks. Maybe you could say that's your volatility channel. But I never want to do those because it's too much for my brain. My brain can't handle. But this would be like your volatility channel, so to speak, because you're taking into account every, or it's a tick chart view, because you're taking every tick into view. So almost, instead of wicks, I would just call it the tick chart, right? The kind of, it just happened when it happened, but this puts you in a timestamp mode off of here. So that gives you a different target, and maybe it is more accurate for the target. It's hard to find a place to hang that sometimes. I guess the only place you can hang it here is currently, this would be your current price pulse off of time. And then off the wicks, I guess it would just be almost the same, but you would just hang it off of that. So you're giving yourself two trajectories built on, one's built on, or here would be I guess this would be the only time-based one you could do then. This. See, this gives you a very conservative exit. If you built one on time and one on price, it's gonna look like this, as long as you can figure that that's cycle-wise where you expect it to go, and this is kind of spike cycle. Maybe you want to make these different colors, right? And then there's the this channel here. You figure this has got to box this whole story in here, right? This will finish off the, you could take this over, so you can give yourself some possibilities instead of just, this is your possible landing areas. Okay, so right here in the story, we're right through this thread here. And then we're going to go... Okay, we broke out here, so next target should be something like that soft spot there. So I could see this scalp to this yellow line because it's a timed out trade. It's filtered out the wick. And then the price pulse, the extreme edge of the market. You're boxing it in here. You're projecting off of that wick. So you're giving yourself a time and a, I guess, a volatility window. So you're copying the volatility when you draw on these wicks. It's just more complicated. You really have, if you really were to do it strictly and take the spike and treat that like the turnaround in the line. So you're looking to hang it off of this. If you think that this is your, in other words, you're selling this because you're expecting it to come back to that. It does it in a cycle way there. Okay, we're about to go up here, and this is a 15-minute chart, and I don't know, just really into the putting this thing on the geometry, the miter box. I guess that's really what I'm doing, is I'm expecting the market to walk through my miter box thing here, but going for the angle of descent. But I guess I'm pretty hopeful that the euro is going to be a buy here, and then we're going to rip up, and I'm going to sell. And that's all I can think of. Of course, we have to wait for everything to happen. That's why, for boredom's sake, I just go to the 15 or the 5 minute. So hopefully it's going to go up.